Welcome to the Private Investors Podcast, the podcast where keen stock pickers Mark Atkinson and Maynard Paton talk about managing their share portfolios. Mark began buying shares in 1984, while I started in 1993. This time we cover Photo Me and the investment potential of passport photos and self-service washing machines. Let's get started. How's the portfolio?
Hi, Maynard. Currently, it's down about 11%, but that's part and parcel of being a private investor, I suppose. Just hopefully it'll throw up a few bargains for us.
Yeah, it's a rough time for small cap investors such as ourselves. I'm down about 12 to 13% this year, so not great, but these market conditions can provide buying opportunities. And you've been buying Photo Me, so tell us about that.
Yeah, my most recent acquisition has been Photo Me, which has got the ticker symbol PHTM. So behind every share is a business. So what exactly do they do? And they're probably best known for the ubiquitous photo booth that you'll find in supermarkets and town centres. And that's something that's been around since 1925 when it was first patented. And that business has gone along pretty steadily until the present day. It's had a good run for its money. But something that's been hanging over the business has been the advent of the mobile phone. And the company have looked to new markets. They've gone into laundry, Revolution Laundry, which is an external laundry that you'll find at supermarkets, petrol stations, even pub car parks. They've got kiosks which involve printing out digital photographs from your iPad, iPhone or tablet. And then recently they've made a couple of interesting acquisitions into food vending equipment, either sale or lease. And they consist of a company called Semper, which do fruit juicing machines, and another company called Rest O'Clock, which is interesting, pizza vending machines. So quite a diverse portfolio.
Yeah, this company's cropped up on my SharePad filter over time because it's got net cash and the directors own a lot of stock. But the share price now is 80 pence. And if you go back to 1998, they were 80 pence back then, which tells its own story. In the last 10, 20 years, revenue's been 200 to 220 million. Profits been up and down. Dividends disappeared 2 or 3 times over the last 10, 20 years. So the track record's not fantastic.
Yeah, it's been a little bit up and down, as you say. The big thing that's been hanging over them is the mobile phone. And sure enough, in 2017, uniquely, the UK government allowed passport photos to be used with your mobile device. And I think the fear was that other markets would fall like dominoes. And 5 years later, nothing's happened. Now, that doesn't mean that they aren't, but I think probably the fear has been a little bit overdone. But they haven't sat on their hands. And they've looked at other outlets. Going back to the Revolution Laundry, they initiated that back in 2012. So they've had 10 years of that to gain a little bit of traction. They've got 7,000 of these units around the world now. So that's reassuring that they are looking at other avenues.
People are still using these photo booths, aren't they? Because the last trading statement said, I'll read this out, we saw a significant increase in revenues driven by our photo booths in the period, particularly in France and the UK, as we benefited from pent-up demand for passports, other official documentation, and all the other products delivered by our photo booth. So even with the opportunity to do a selfie and you send that into the passport office, people are still using them. So maybe these photo booths have still got life in them.
Yeah, when you've got a pandemic that comes along and nobody's getting on a plane, that's going to affect your business, certainly in the short term. So there's probably some deferred expenditure there where people are now digging out their passports and finding out that it's about to go out of date or it is out of date. So that's probably giving them a little bit of a shot in the arm. But if you look at a Photo Me in the UK, it's £8 for 5 photographs. So that's not a massive expenditure. So I think it's affected turnover in the UK, but I don't think it's killed it.
So I worked out they have about 28,000 of these units across their estate, and it stayed about that number for the last few years. And each unit last year generated just over £4,000 each, which works out at £12 a day.
Yeah, it doesn't sound like a lot.
Doesn't sound a lot, and it's gone down from, I think 5 years ago, from £15. I guess that will improve this year with the people renewing their passports now.
Yeah, I am very interested in vending as a concept. It's not a new concept. But one of the beauties of, if you look at machines, it is low revenue, but you're not paying wages, you're not paying pension, national insurance, you don't have to bother about maternity or paternity leave, and you don't have to bother about appraisals or training or anything like that. So it is a low cost option.
Yeah, I like the idea of putting a machine out and just sitting there collecting money 24 hours a day all year and not having anybody apart from the engineer who comes out once in a while to service it. The idea of having a machine collecting money is great, but I'm not sure about the economics of these booths. They do spend a lot of money on I think they've said 35 million over the last 4 years on these booths, and the number of units hasn't increased. There's a lot of upkeep for a static number of units. But laundry sounds a bit more interesting. Self-service washing machines out in pub car parks is really a great business model.
If you want an excuse to go to the pub, perhaps it is. These are across Europe. They appear to be popular. With the partners that they've got, the selling point to the petrol station or the supermarket is its dwell time. That's what's of interest to their partners, in that I don't think they're particularly interested in the income that it provides. But the hope is that if you go to your local petrol station and you put your washing in, then you're going to perhaps fill the car up, buy a newspaper, buy a coffee. So that's the draw there. And they do seem to be rolling them out. I know laundrettes are in the decline, but if you look at the cost of Revolution Laundry, the cost that they incur, it's not in a building. It's open 24 hours, 7 days a week. You're not to employ anybody to open the laundrette or heat it or clean it. It's a far cheaper way of providing a laundry service. And there again, it's convenient. If it's at the petrol station or the supermarket, generally can just pull up alongside it rather than worry about parking on some double yellow lines or in a town centre and paying the parking charges that you'd have there.
So who are the customers then? Because it says in the annual report you can clean curtains and duvets. I can't remember ever wanting to clean my curtain. Who actually uses these?
Well, football teams, horse blankets, you've got people who are working away from home, contractor, and so it's a diverse group of people. And again, not everybody still has a washing machine. There are a low percentage, but there are a percentage that haven't got a washing machine.
So I've worked out the economics of these laundry units as well. So I reckon last year each one took in £11,000 just under, which works out at £30 a day. Doesn't sound huge.
No, again, it's low revenue per unit, but interestingly, in the reported accounts, they actually said this is the highest margin part of their business.
Yeah, that's better because you think that this is perhaps going to complement or even overtake the photo booth income one day, perhaps. So that's promising. So at least, whereas photo booths were making £15 a day, now it's 12. This was making £22 a day, these units, a few years ago. Now it's up to 30. So the progress here is positive, which is good.
I think they are looking to run down their exposure to the photo booths. I think they can see the potential risks. And it's interesting that they are rebranding the group from Photo. It's still listed as Photo Me, but it markets itself as Me Group. So it did say in the report that it will remain as Photo Me for the time being. So you can see that they're trying to turn themselves into a general vending business. And when you look at the markets that it's in, when we talk about vending, it's generally putting a coin in a slot and some kind of finished good comes out. There is some element of processing or added value. It's printing a photograph, or it's taking a photo, doing your laundry, it's heating up a pizza, or it's squeezing some fruit juice. So it's probably the next generation, what we see of vending machines.
Yeah, I struggle with the economics. I just wonder about the economics of certainly the laundry machines, whether they're getting a suitable return on the investment. Now, it worked out £30 a day with the group margin, works out about £1,500 a year they make on 11k revenue. So, and each one costs, I'm not sure if my sums are correct, but they said last year they installed 700 laundry machines at £16 million. Most of that went on new machines, and it comes out at 20k a machine. 20k for a heavy duty washing machine, which sounds a lot of money. So the return on that 20k is about 7 to 8%, which is modest. You'd like to think they could get a high return on each machine. So I did see in their latest statement, I read this out again. Furthermore, in order to expand the laundry range and better position ourselves in the market, we recently launched a new low-cost laundry machine, the Flex, and have already successfully carried out several installations across Europe. Early trading results have been extremely positive. So they're talking about a new low-cost machine, which I reckon they've rolled out these existing machines. They found, okay, we're getting 7 to 8% return on them. Maybe we could improve that with a new low-cost machine. I think that's the way forward. We'll have to wait and see how much they spend on these new lower-cost Flex machine. But it's a good news that it's a higher margin business than the photo business. So tell me more about orange juice vending. How does that work?
The orange juice vending is basically, they manufacture the machines. So they aren't servicing the machines. They're manufacturing them. They are either selling them or leasing them. Basically, you feed the various fruit at the top, whether it's the apple or the orange, and it squeezes it down and makes a nice juice drink for you. That's targeted at the food service market. So that could be restaurants, cafes, canteens, those kind of places.
Yeah, I've seen videos of the oranges just falling into a hopper and a basket at the top, and they just fall into this machine and out comes the juice.
Yeah.
Having experienced a domestic juicer, they can be quite slow. You have to use a lot of oranges to get out a suitable drink. Pizza vending,
Yes.
How does that work then? Because all I've seen is the pizzas come out in a box. How does it work?
It's quite an aggressive kind of marketing campaign that we got on this business. They required it for 3.1 million. And this business, Resto Clock, was manufacturing just 40 machines a year. And they're looking to ramp this up to 100 machines per month by the end of 2023. So this is part of the business that got big ambitions for. But basically, these are being sold to pizza vendors. And again, it's the 24/7 argument that you can have this outside your shop, you load it up, and within 4 minutes, you've got a pizza that's ready to eat.
The machine doesn't actually make the pizza.
No, it's a pre-made pizza. And depending on the model that you've got, the bigger the model, the more choices that you've got. I think the biggest machine holds 136 pizzas and there's 8 choices.
Wow. I can't believe they're going to make 100 a month. Because that sounds like a lot of machines.
Well, already they're up to 30 per month. So they're obviously flexing this up pretty quickly. They're probably piggybacking their existing technology that they've got on the laundries and the photo booths.
It's interesting that they're selling these machines. They're not taking the money. Somebody else has to take the money and service them. They just sell the machines out. Do you think that's a better business model than vending part or?
I do. I don't know if they see that as turning themselves into a manufacturing business. I was going to say earlier on about when you look at the operation, it's very tight in that they've only got just over 1,000 employees and 650 of those are field engineers. So I would imagine that on the existing estate of the photo booths and the laundry, the same engineers will be called out to assist with any kind of leasing problems that they've got with the fruit juice and the pizza side.
Yeah. There could be some service income as well. Yeah. The vending income is generally quite predictable as such.
Yeah. Once you've sold the machine, you've sold the machine, haven't you?
Yeah. So it could be a bit lumpy, but we'll see. It's interesting to see how that pizza machines, how they work, but a lot of it's in Europe. This is surprising.
The markets that they're targeting on the food side are currently is France, Switzerland and Belgium.
So us in the UK perhaps have different sort of view on food machines. What do you think of the financials? Net cash, pretty good.
Net cash is always something that I like. The latest trading update did 41 million in cash, and the capitalization is just over 300 million. So that's reassuring. I would imagine that has again been bolstered a little bit by the backlog on the photo side, but it's a cash generative business in that you're not extending a lot of credit generally. So people turn up with a coin and they put it in a slot, and then you've got the money. So it's quite quick at coming in.
Yeah, very little trade receivable. So yeah, pay on the spot for your service. And they do defer the supplier payments for some time. That helps the cash. The debt's low. They do have some debt, but that's only at just over 1% interest. So so the bank's pretty happy with the finances. So that's always a good sign. And as you said, the revenue per employee, well, you said there's 1,000 employees. So revenue per employee is over 200K.
Yeah.
Which is pretty impressive.
Yeah, and if they can find further acquisitions and it's where to go, if your service engineers are just going to see another type of machine, for example, on the periphery of the business, they even do like children's rides that you may have seen. And generally they're next to a photo booth. As the engineers going to visit the photo booth, the children's rides there, I would imagine it's just a case of, squirting a little bit of WD-40 on it and taking the coins out.
Yeah, it must be an easy sort of business. These machines just stay there for years, don't they? You pay £1 for a children's ride, and I don't think they take much upkeep. I think the annual report said there's 2,400 of these kiddies rides.
That's right, yeah.
So they have quite a few. Talk to me about Serge.
Well, Serge Crasnianski, he is the long-term CEO of PhotoMe. I think he's at about 79 now. And he's recently been building his stake in the company. It was standing at about 22%, and then he was steadily buying, taking himself up to 28.8. And I was beginning to think at that stage, would he be putting a bid in to take it private? But then he made a purchase of a further 7.7% from the Dan David Foundation, which he paid 70 pence for that. And that triggered a mandatory offer, which subsequently lapsed. And that's left him now with a holding of 36.5%. You could think to yourself, what does he know?
That's what I'm thinking. What does he know? Because he spent £20 million and you don't do that on a whim.
No.
He must know something. He knows. This is the intriguing part of PhotoMe. What does he know beyond what I've looked at in the accounts, which are a bit up and down and perhaps not great, but clearly he has seen something or has a view on where this company's going, and he's spent £20 million to back up that view. That's not clear to me, but it's intriguing. He's bought a load of shares at 70p.
Yeah, it is interesting that his daughter, Tanya, has recently joined the board as well. She doesn't appear to have been from a vending background, but I think she's a lawyer.
Yeah, she's got a legal background. Serge Crasnianski, I didn't realize he trained as a nuclear physicist. He's got more than 100 patents to his name. So he's the R&D man. So he knows about R&D and developing these machines. So he seems like just the chief exec you want, who's hands-on, but he is 79. And I suspect Tanya, who's now his daughter, who's on the board, that's part of succession planning. That was mentioned in the last report. So she'll be looking after the business when Serge retires at some point.
I would think that's probably right. Yeah. Perhaps he's seen what I'm interested in vending, the future of vending. Yeah. That we will not be able to have the luxury of using a workforce for low grade vending job, because we've got an aging and a declining population. If you look at a country like Japan, for example, they've got a declining population. That's an actual hotbed for vending. There's one vending machine for every 30 people in Japan. So I think in time, we will have to look to mechanize certain jobs, certain tasks. And I think that is something that will spread across certainly the developed world.
So you think there's a long-term tailwind?
Yes, I do.
For this sector?
Yeah.
It's very much the Serge Crasnianski show, though. I mean, are you concerned looking at the non-execs? There's no CFO on the board. The non-execs all seem to be his friends. So it's very much you're backing him and the long-term prospects of vending machines. Yeah,
it is a potential risk, but given the valuation, I think it's a risk that I'm prepared to take at the moment.
Yeah, it's quite modestly valued.
Yeah, it can be good. It's a double-edged sword, isn't it? When you've got somebody with that amount of control on one side, when you think of what percentage of people generally vote, if you've got the block vote of 36.5%, you're pretty much over the line, aren't you? Against that, you think, but it's in his interest for this to work. I'm not saying it's just blind faith, because I'm looking at the business as well, but I think it is reassuring that he's got himself that much faith in the business, and that if his family are coming along as well, that he sees their future there as well.
Yeah, and I think he's in line for a £5 million dividend this year, which is a lot more than what he gets paid as a basic salary. So we'd like to think the dividend will be uppermost in his mind.
I think his salary is about $500,000, isn't it? So that's not his core focus. If he's not in it, I would say, for the salary, he's in for capital appreciation and the dividends that this business can provide.
The non-execs are interesting because there's a solicitor, an auditor, 2 investment bankers, a former group FD, and a representative of a major shareholder. So they're all finance people. So none of them, I don't think, are going to challenge Serge on R&D matters. I don't think, looking at the bios in the annual report, they are the type of people to use a self-service washing machine either. So you are relying on Serge here, I think, to run the show, and which is good and bad. I mean, I own Andrew Sachs, which has a similar sort of corporate governance setup where there's a dominant shareholder who owns 90%, him and his family, and all the non-execs are his family members or his friends, and there's just the managing director on the board, but the company does all right. So you just got to live with the corporate governance quirks as such. But if you buy shares where there's a dominant shareholder, you just got to accept that the corporate governance may not be fantastic. If the company does well, fine. If it doesn't do well, then that may be a different matter.
Yeah, there's certain companies that I'm invested in, but I've got more shares than some of the directors. So it's always reassuring when they've got more than me.
Yeah, they're in control. So the risk is it becomes a fiefdom, but I don't think there's an obvious risk of that here. I think Serge is a product man. He's an R&D man, and he likes developing machines. So if there's an accountant in charge, I think that might be a different matter.
Is that a red flag for you, not a CFO on the board generally?
Well, I own at least 2 shares where there's no CFO on the board. So it is unusual, because there's usually, if you see a presentation, there's the chief executive, the FD presenting, but you're never quite sure of the financial controller when they're not on the board. So they don't have a bio in the annual report. You don't know who they are. But you look at the accounts, and if the accounts all stack up, you think, okay, the controls are good. But yeah, it does make you ask questions: is why is there not a CFO on the board? Who's actually looking after the accounts here?
Yeah, it's generally the CEO and the CFO side by side, isn't it? Working as a team, or they should be working as a team.
Yeah. When they're not there, you think, who are they? So yeah, it's something to monitor. I've not found anything particularly alarming in the account. I think it's fine, but it's just something to note and to be aware of. Talking about valuation, 80p, 8 times earnings, is that right?
Yeah, that's about right. Yeah.
Looking at the trading statement, they're predicting profit before tax of 50 million, which is last year was 29. So a big jump on revenue, up 20%. So
Yeah.
revenue's up 20%, but a really big jump for profit. So that shows the gearing in this business. So it looks like they're getting back to pre-COVID levels. So profit before tax in 2018 was about 48, 50 million. So they're just getting back to that level now. I guess we're recovering. And then it's what counts then is how the company performs beyond that. So are you still bullish on PhotoMe? After this conversation, are you going to rush out and buy more, or?
I will consider adding. The results are due next month, so I may consider topping up ahead of that. Again, it all depends what other things are competing with it, but I'm not put off by this valuation. I think upon greater detail in the results, it could enhance the share price.
What has to happen to make you buy more?
I think greater traction on the food side and the laundry side. And the longer that the photo booths are unaffected, that's reassuring. That's reassuring that the longer that stays in play and buys them more time to spread what they do, to diversify. It's not all gloom and doom. In Japan, which is one of their major markets, the Japanese have a My Number scheme, which is a voluntary ID scheme, but it was incentivized by the government and there was a large take up on that. So that a bit of a windfall. And who's to say that in the future there won't be other things that come in for ID cards in other countries? I know it's something that they've debated in the UK. I know it's highly controversial, but that is something that may come along at some other stage.
Yeah, the fact that other countries haven't followed the UK in allowed self-taken photographs, that's encouraging, I think, because you'd have thought if it worked in the UK, other countries may have followed suit, but they haven't. So
yeah, there's no reason to that the UK might not go back. It's not necessarily one-way traffic.
Yeah, I wonder how many applications the Passport Office receive where they reject the selfie photograph. We are talking the general public here, so there must be hundreds, thousands of these applications where the photo is not taken correctly. Do you know how many passport applications there are every year?
Are you going to surprise me now and that you've done your homework?
I've done some homework. It's 7 million, which
7 million.
It dropped down to 4 in the pandemic. So you think if it's 7 million in a normal year, it could be 10 million this year.
Yeah.
Which is a lot of it. It's 7 million times £8 for a photo is 56 million pounds in the UK.
Yeah. The UK market was affected in that machines were withdrawn from low footfall areas. But all that consisted of basically was, in order to decommission it, was take the plug out and stick it on a van. And they've been utilised in other parts of the group. So it's not been a major problem it's not as though you're taking a building down or anything like that. It's quite a low cost operation to put that machine in another spot, in another country perhaps.
So is this a big position in your portfolio? Is this one of your largest ones, or
previously it's been a middling holding for me, which I've been watching closely relative to its size in the portfolio, but I've now placed it in what I would call my first team. That is, it is a more significant holding now.
Yeah, I think with Serge buying, that's the intriguing part for me. He knows something. He must know something to spend £20 million and done all the rigmarole of the offer. He must know something in the company which is not apparent from the past financials which I've been looking at. So that's intriguing for me. So we shall see.
So Maynard, you've been asking me a number of questions and I've put this one forward, and I'm not trying to sell it to you in any way. Some of the businesses that you're involved in, there are some similar qualities to what you look at. So I was wondering, is it something that you would take a closer look at?
Yeah, it's got net cash as a owner-orientated chief exec here. It's modestly rated, so it meets a lot of my criteria. It has flagged up in a lot of filters that I've used, but I don't know. I don't know about the economics of these machines. I think photo booths, perhaps the best days have been and gone. Laundry machines, I'm not so sure, but the lower cost laundry machine, that could be interesting. I can see the attractions as a value. If I run a more diverse portfolio, then it could be on the fringes as a value investment. What appeals to me is Serge buying. So I can see it doing well over the short term. But Serge knows something, I think. So I can see why you're interested in this.
And it's in your capitalization field, isn't it? You generally look at companies about this kind of size, don't you?
Yeah. So sub 500 million or most of my companies are sub 500 million. So yeah, it meets a lot of criteria. I just don't understand, or I don't feel entirely comfortable with the economics of these machines, really. But I could be completely wrong.
So what would potentially make you look?
I mean, if these laundry machines really take off, I think if there's the revenue per machine, if that really improves, or the profit per machine really improves, and it becomes obvious, then that would get me more interested. I think that's needed for a re-rating. I've calculated they cost 20,000 each. If these new flex machines cost 10,000 each and they double the revenue, the thing will take off, and you get probably a good share price re-rating from that. It wouldn't be available to buy at 8 times earnings, but I don't know. There's no evidence to say that's going to happen. For now, I'm willing to sit on the sidelines. Like a lot of shares, I'm willing to sit on the fence and see what happens.
Yeah, there's always arguments both sides, isn't there? There's always potential risks. There's always a good reason not to invest, isn't there?
Yeah, and there's current market as well. You think there's a lot of other shares trading on modest multiples now where you think that might be a better business than photo booths and laundry machines. So if I run a relatively concentrated portfolio, I've got to have some conviction, and I don't have enough conviction at the moment with laundry machines. Well, that's it for this time. Thanks for listening to the Private Investors Podcast. If you enjoyed the episode, let us know by liking, subscribing, or even leaving a review. Until next time, thank you and goodbye.